Ian Harris, CEO and President of Outcrop Silver, where we have our flagship Santa Ana project in Colombia. It's one of the world's highest grade primary silver projects in the world, and post-resource.
Yeah, good to see you.
You too.
This is coming habit. We're seeing you live always, it seems. So, Peter, you're here, trotting up here to do what? What do you want out of it?
You know, there's a saying within PDAC, it's like, why do we keep having a booth? And then people go, but it's like real estate, because if you give it up, then it's hard to get it back. You know, there's got that feeling. And to be fair, a lot of it it's really branding. It's making sure you're showing a presence, keeping your face out there. And obviously, it brings in so many people, and it really opens up some opportunities to look into other things.
Yeah, I guess keep tabs on everyone else and compare yourself. Anyone from like the Colombian government or ministry up here, is this something that's important to them?
You know, in years past, it used to, but we've obviously had a swing in about 3 years ago for the first leftist president in 40 years. But the nice thing, you know, Colombia is becoming exciting again. Right, you know, we're seeing new interest. Right, there's some very successful projects going on, including ours or Continental now Collective, among others. But in about 14 months, we have another cycle of presidential elections. You know, you only get a one term in Colombia, so there's some anticipation that you know, somebody new comes in, wants to bring in some investment into the country. And obviously, the mining potential in Colombia is huge, and so that's the backdrop, right? So maybe not next year, but the following year we'll see again. You know, members of the government showing back up at people.
Good. Now, I'm so interested in what you've been up to. So obviously, last time we talked about the business model, and I think that the need for companies to just think a little bit outside the box. Because I'm subconscious that even some of the companies, PDAC here, they're kind of banging their head against the same door, hoping for a different outcome. And I do worry for them. And maybe we do need a clear out. Maybe that's it. Maybe it's no bad thing. But in terms of that business model we talked about, you know, so you've moved a few things along, getting some higher grades in, you know, maybe looking even at a resource update, and I guess eventually moving this thing through to its final conclusion, probably in about 14 months as well. So
a little bit more on the bigger picture.
Yeah, gives a little bit more. The conclusion of 2024 looked like what?
So we set the beginning of 2024, and really in April, right? We put our heads together and say, what are we going to do? How are we going to do this? And we came up with an ambitious plan because it was such big step outs. We had to do over 100 right-of-way agreements to just get in, and when you're talking road, water line, platforms, etc. We did over 100 right-of-ways to execute on our plan, and really that didn't hold up the plan, right? So, which was and quickly, I think in April we started, and by June we had already mobilized a second drill because we had enough space to be doing the work, and allowed us to execute and test as many targets as possible. We even got at the end of the year all the way down to the southern boundary, some of the targets on the southern end of the property. And that set us up for a very nice situation for 2025. Because I agree with you, we know where our intrinsic value overall, even when we've talked before with the plan B and C concepts, right? There's always the primary strategy. It's what your valuation is based upon. There's a saying, you can't mine hope, right?
So try.
Yeah. I've tried to, and it doesn't work very well, right? So you having very strongly based on my situation today, right? I know what our valuation is based upon. I know why we have the valuation that we do. How do I create more value, and how do I do that spending less money than the value you create, right? And so being able to execute in 2022 set us up to be able to do that in 2025 with a high level of confidence, right? It's called exploration because it's not perfect. There's a difference between inferred and indicated and measured, and the level of confidence, but at least we know within some margins of error of where the additional resources are going to be coming from. So now it's about executing on that.
Right. Okay. But let's talk about how you do that, because money's important. Money's not cheap at the moment. and a lot of people clamoring for those same bucks. Obviously, I think you noticed you've got a little bit more interest from a certain large investor.
Yes.
He's come in, what, 19% now?
19.9%.
As much as he can go before taking the step over the bridge there. What's that do for you, and what's he attracted to? What is it that you're saying that appeals to him? He's a big silver guy.
Yeah, and considering our size versus some of his other positions, he's put big money. But I think we're in the top 5 actually of the investments last year for Mr. Sprott.
Yeah.
And I think it's we have an intrinsic value and we have a valuation because it's grade,
right?
It's recovery, it's concentrate grade, right? It's high value rock that will maintain its value through a potential production chain, and it's primary, right? A lot of the other projects, we're truly 75% of our value is silver. So, and I think if you compare us to some of our, I don't call them competitors, but peer group, right? There's a certain group of us that are, decent grade, good recoveries, primary silver, et cetera, and then we have a very similar valuation in terms of based on our resource size. It's a small group; it's not a big one, and our only, we stand out on grade, and we maybe stand out on recovery, and some of these we have one of the smaller resources size, right? But we have a pathway of how to grow that resource size.
Right. Let's go there, because I think Eric Sprott doesn't want to get involved in lots of small little companies. There's great expectation there that you can deliver on that. Okay, the grades there, recovery was at 96 and 99% on the silver, gold in that order. You've got to deliver on the scale. That costs money. You do have a path, an idea of how you go about doing that. You said earlier, we're going to do that effectively. We're
Correct.
going to, right?
Efficiently.
Efficiently. So let's talk about what that actually means.
So if you go to our online and see our presentation, we literally have a list. It's like we have the colored green, I think right now is the resource, and then it goes from target, drill ready target, discovery, blah blah blah, and we literally go through and we say, okay, what's the average grade? What's the average thickness? What's our average success rate, right? Because it's complicated geology. And what's the overall strike? What's the total amount of ounces that could be there, potential? And how much does it cost? Or how many meters do you have to put into it? And you really come up with an equation that is ounces per meter, right? So we literally are ranking them and trying to figure out how much it would cost to convert to a resource. So we have a plan this year. Our total budget for 2025 is about it's $12 million. It's actually a pretty round number. It's $12 million. We have 2 drills running. We will drill 24,000 meters this year, and I know if we are somewhat successful, we'll be able to create much higher, more value. The goal is to do it at around 50 cents. Is basically our cost to convert to resource. And our valuation is much higher than that number, right? So we do believe, even if markets continues, we are putting in a plan that accretively will create more value for less money than we're spending. And then leverage to, if silver takes off, we're extremely leveraged. Silver is actually one of the commodities that actually we trade to a beta to the commodity price. We have been very responsive as a group to silver price. Right, which is normal in other areas. You normally see that, but you're not seeing that happen as much in the most recent cycle. But it does happen in silver. So if silver runs, the expectation, based on the current situation, not past situations, but today's situation, where we are leveraged to silver price. And I think there is even a third argument that overall mining exploration equities overall are way underpriced. And so if that changes, so we're leveraged, I think we're leveraged to silver, we're leveraged to exploration equities. And even if that takes some time, we put in a plan where we can create more value than it costs to add that value, right? So,
okay, well, let's get into that a bit, because you leverage the silver, right? So you're sitting back waiting for the silver price to do something. It's done a lot for you in 2024, frankly, right? But that's out of your control. and whatever you think of the thematic, and it'll be in lots more solar panels, and we're building lots more solar panels, is great. There's an industrial argument which is more believable than it has been for a while. The leverage to exploration equities is the bit that I'm struggling with, because I'm not seeing too many companies getting rewarded. So what profile of exploration equities is getting rewarded? And, do you agree that maybe there's quite a bunch who aren't getting rewarded?
I would agree. And I did put the caveat at the beginning. There is a peer group, because it's not a big peer group, because there are very few quality primary silver projects.
Lay it out. Okay, what do you need to be like? So, me as an investor, you need to look for companies that look like what to qualify?
I would argue that the first thing you need is to be truly primary silver.
Okay.
Right? And primary silver means your primary product is silver, right?
Yeah.
And I even see people that call themselves primary silver, and then they're not. It's not over 50%.
Not primary silver equivalent.
Yeah.
Silver, right?
So the big one is the silver value over 50%?
Got it.
Right?
Yeah.
Is it?
And why is that attractive? Explain to people why that's important.
Because it obviously creates the most leverage, and you are true. And there's and whether it's fair or not, silver companies get valuated in a different way that gold companies do, and different from copper companies, and different from zinc.
Why do you say that?
Well,
gold
because
companies seem to have done well. Certain types of gold companies seem to have done quite well last year. Certain types of copper companies seem to have done well last year. What's so special about silver?
Well, the big reason that silver normally has a different valuation is due to the upside potential when silver moves, right? Because the argument would be, let's make a bet. Do you think that gold could double this year? What's the chances of it doubling by the end of 2025? And you're like, well, I might invest. If I believe that, I might also be investing in a shotgun, right?
If it did, I wouldn't like everything else around.
That's right, exactly.
Okay.
But if I said, do you believe that it's possible that silver could double in price this year? And the argument would be, yes, there's a realistic possibility of that happening this year. Is there a possibility of copper going at 2 times this year? No, right? But silver has that ability, and it's historically. Huh?
Driven by what?
Normally, it's driven by some sort of physical squeeze, right? And what makes silver interesting is there is a significant above ground inventory that's reported and non-reported, which includes your grandmother's silver candlesticks, right? There is a certain amount above ground inventory. So as prices go up, there's a draw off of that unknown inventory, but it is limited, right? And so therefore, even in a supplied, if I told you over the last 5 years, right, we've accumulated about 1 billion ounces of silver deficit. 1 billion. Our total annual consumption of silver is 1 billion. Mines produce about 800, recycling makes about 200, so it's equivalent to 1 billion, right?
Right.
If I told you that we had accumulated 100 million ounce deficit in gold, it would be insanity, right? If I told you we'd accumulated a 30 million ton deficit in copper, which is basically a year's production in both those assets, it'd be through the roof. It would be murder, like it would be craziness, right? And silver can build up that kind of momentum because it can build up a very large deficit before that physical crunch could happen. You could say that a lot of that billion ounce deficit was built during a time period where investment was negative. So people were selling silver into that deficit creation. But when prices really start running, that investment can turn around very quickly. And so what can happen is all of a sudden there's a pinch, right? And it can get squeezed. What I think is very interesting is in the past squeezes, they were unsquozen. Is that a real word? Can I
Let's
make
make
that
it
up?
one.
I'll make it one.
Yeah.
Right? It was unsquozen. Like the past one, the 1980s, the U.S. sold all its silver that backed all its silver certificates. Back in the 1940s or 30s or whatever it was, right? Production in the United States quadrupled in a single year, right? Those two things can't happen anymore, right? We don't have silver-backed currencies. There's flood a market and with a ton of silver hitting the market. And we know we cannot quadruple silver production anymore on a flip of a switch, right? Now it takes about 29 years for a mine to be permitted in the United States. So the good old days are just getting on your donkey and running and start hacking away, those days are over. And the other big one is that the underlying demand that has been growing has been in solar panels. It's about, I think, 25% of all silver now gets consumed in solar panels. And it's quite agnostic to silver price, right? The overall cost of a solar panel does not get super affected by silver. It does, don't get me wrong, but it's not enough where they're going to say, oh no, let's just stop doing this, right?
It's not getting substituted out.
So I love how this all,
yeah.
and I'm sorry, I'm getting on my soapbox.
Yeah.
On top of it, primary silver mines only produce less than 25% of all silver, right?
You're right. You're going where I want.
And the other part is, so if silver runs to $150, I'm just making up a number,
Yeah.
and that's not somebody down in Chile is going to go, let's build that copper mine now because we have some silver, right? Even though copper mines produce about 30% of the world's silver. So they're also agnostic to the sales price.
Yeah.
And that creates the dynamic where silver can be very explosive in pricing.
Right. Okay. So that kind of secondary or derivative market is not an immediate impact to silver price going forward. Okay. Got it.
That was a long way of saying that there's a differential way of pricing different commodities.
Don't worry. I'm still here. Enjoyed it. Okay, but let's get back to you and what you're doing to kind of fit into this. A bit of a clue there. There's a sort of timeline to a point in time where you say, right, I think we can increase these high grade ounces that we're finding. We can get after these things with $12 million. We can infill, step out, whatever, however you're coming out that program. And don't know if you've announced a drill guidance on of any of that in terms of your targeting.
We have the ounces, sorry, not the ounces.
Yeah.
The meters,
Yeah.
right, of where that's going to go, an idea, but we are probably going to lay out that more and more detail here very...
Great. I'd love to hear all about that one, right? So, but you're kind of working to an endpoint there where you can say, look, as one of very few substantive primary silver companies in what's been a really kind of tricky space, right? Mexico's only just sort of coming out of the shadows of a sort of tricky 6 years. And there's some big M&A activity, don't get me wrong, I think, but that's super big guys buying other big guys to create a big company. What's going to happen with companies like yours in that environment of companies of a certain size? You're going through this process. I think we can show scale. I think we should be rewarded for that in terms of the ounces and the value of those ounces. What happens? Is it more M&A down at this level, or is it just you guys are each on your own? You got to see what happens, see what the market allows you to do. How do you say control is what I'm asking?
I almost don't want to tell you what I think.
Oh, go on.
But because at the end of the day, you have different CEOs sitting down, and some of them have a luxury of having a decent valuation, like we do. Right, and we do because we have the Mother Nature granted us
an okay valuation, right? I don't think you're overvalued. I don't necessarily.
No, because if you look at similar peers, it's actually a very similar number.
Right. Okay.
Yeah.
But my point is, if to make those kind of important step changes to change I know you got Eric Sprott on there as he's like at 19.9, but to make that step change in terms of the profile of the register, and to kind of give you the liquidity, give you access to cheaper capital, to allow you to do that growth plan. What happens? How do you manage that?
I think the easiest way to answer that, and not go into a roundabout answer like I did last time, was how did First Majestic become First Majestic, right? And how did some of the other mid-tier...
But can you do parallels like that? It's a different environment, right?
I think that history has a way of repeating itself, right? And I think that as a minimum, Outcrop Silver and I'm telling you, the peer group it's finite, right? It's not 10.
I get it.
Right? It's 5, right? Maybe, right?
Yeah.
And you could argue, but and so it's a part of that mix, right? If you're coming up with the ingredients to build a new silver, mid-tier silver, right? We add high quality, high grade primary silver ounces that will be eventually, when it becomes a future operation, I believe high margin ounces too, right? And so therefore, I think it's a part of the ingredients of moving things forward. I believe that there will be consolidation within the market. right? And because access to capital is very important, and doing that efficiently, you want to do it at better valuations. Santa Ana is a part of that equation.
Right, but if you're not one of the acquisitors or the acquisitees, and how does that activity help you? So either you say, I am going to participate in that, I know I'm attractive, and I know I'm attractive now, maybe you benefit from that,
I think
reduction.
the luxury of Outcrop is we already have the valuation that puts us in with a similar, right? We're not overvalued, right? We're not like some number off the chart that's where there's a peer group that says very similar valuations. We at least know our valuation is proper, right?
Right.
And the opportunity is when there's some, because it is a bifurcation. I say it's not you're in the club and you get a 10% bonus. Right, it's a true bifurcation when it's such a tight market. It's so hard to raise capital. Being able to raise capital affects your valuation, right? And so if people go, I like your project, but I know you can't raise the capital, your valuation goes, instead of being $2 an ounce, it's 40 cents.
Yep.
Right? And being, just by fixing that problem, saying, well, coming together will help you access capital, you could actually create value improvement in that project. And that's why I say Santa Ana and Outcrop will be a part of that story moving forward.
Right, but there's people who are in control of that, and there's people who are passively sitting waiting for it to happen, right?
Correct.
The latter, I'm kind of like, no. So who are you? What are you? Are you just going to sort of see how things pan out?
No.
Okay.
We are actively reviewing. And just the same way I say, okay, I came up with a plan. This is how I do it. It's going to cost me 50 cents, and I'm going to convert it into a valuation based on We think about these things all the time, and the next piece of it is the same. Where I would argue we are the smaller sized resource, so obviously we still can create value as we increase our resource, right? But it will take some time. But maybe there's value in someone who maybe doesn't have the best quality deposit. I'm making things up, but they're very much closer to getting to the finish line in terms of getting things in production, right? We're also looking at doing that organically internally, as we talked about in the past, but we are constantly evaluating that mix, right, of how it can play together.
What we are, and let's not get lost in what maybe could be, should be here, because, okay, I'm getting it. You're aggressive. I like it. But sometimes
I wouldn't say I'm aggressive. I would say I'm actually very conservative.
Ambitious. You like ambitious?
Yeah, maybe.
Ambitious,
Yeah,
okay. You can have that. Conservatively ambitious. Sorry. But you go, sometimes there's mergers of one shit co and another shit co, and now you've got one big shit co.
Are you going to bleep that out on YouTube?
Definitely not. Definitely not.
Yeah.
You know what I mean? And it's sort of like doing the right sort of transactions is really important. Not M&A for the sake of M&A. Because I've seen a bit of last year. I don't like it because it kind of eventually gets found out, and I've paid a kind of premium price for something which kind of ends up back down here. So, and there's no certainty. I don't know where you are with conversations, when you're going to do conversations, etc. But I like the idea that you want to engage in that kind of dialogue because it makes, for a rationale other than it's M&A. We're a small peer group of people who clearly need something like this to happen, because it's going to be great for not just us if we get it right, but maybe it sort of gives some clarity to the sector about it.
I believe that there is a way to do it effectively and ensuring that it's accretive, right? And I believe that, right? Because you're right. When you're sitting in a bad situation, I won't use the same language, but if you're in a bad situation, putting two bads together, right, it is, maybe it's just enough catalyst to raise the money to keep to move things forward, which literally is not a terrible reason, right? I mean, the ability to finance does change projects, right? And the most frustrating part right now is looking at a lot of great projects, right? But because there's not enough capital to go around, that affects their valuation. It's the reality of where we're sitting in, Terry. It's frustrating, but it doesn't change the quality of the asset. So if you can change the situation of creating a mechanism to attract the capital, the asset is still good, right? Economically good, right? I mean, you see some things that come out with a PEA or a PFS or something, and it's got a 30% IRR. That's a fantastic project. And then right? This market demands spectacular, right? It demands spectacular.
Yeah, and it's getting spectacular failures at the moment. So I think that's the problem. So I want good people doing good things for a reason other than hoping for some catalyst. So I like your model, and I like the way you go about thinking about it as well. So we better wrap it up. We're getting signals over here.
Okay, very good.
Good to see you.
Always.
And love these conversations.
I always
Appreciate
enjoy
it.
it. Thank you very much.
Thank you.